By the way, I must also tell our viewers that, and I would ask Mayuresh Joshi about this, that also impacting sentiment on IT, if not actual, is Donald Trump's tweet saying that in light of the attack from the invisible enemy, I will be signing an executive order to temporarily suspend immigration into the United States. So lots happening within world new world orders as we speak. Since we're on the topic of IT and this Donald Trump tweet, let me ask Mayuresh first about that, then we'll talk about crude, and then at some point of time in the show, we'll also get in Hugh Young from Aberdeen to talk about his thoughts. Mayuresh, good having you. Thanks for joining in. Good morning to you. How do you view what Infi, TCS, Wipro have done in light of the current circumstances, and Donald Trump saying immigration likely to be suspended? Does it have any meaningful impact on IT?
Morning, Neeraj. Thanks for having me. So first of all, I think the results that have got posted and the expected management commentary, I think much in line in what the analyst expectations were. So I think it's rather inconsequential in terms of the numbers being posted in terms of the Q4 performance and the expectations on the annualized basis with guidances coming off, or rather not getting disclosed at this point of time. So largely, I think all the levers that we probably talk about for the sector as a whole, margins clearly seem to be under pressure at this point of time. The obvious reasons are the miss out in terms of billing days at this point of time, uncertainty in terms of discretionary spending for the large sectors that they cater to, specifically in terms of BFSI, retail, manufacturing. And what happens, as you rightly pointed out, I think the executive order that has probably come through, I think the on-site part, which is very, very critical for IT, though I think a lot of de-risking has happened over a period of time and a lot of revenues have shifted more on the digital mode as digital contributes quite significantly. The hit might not be that significant because I think there are alternate options that can be done. But again, I think the execution and what probably happens in terms of the levers from a margin, specifically an EBIT margin perspective and cash flows thereof, I think that still remains a question mark for the better part of this year. So I think the downtrend that you probably expected to see for IT, which can be very, very sluggish considering the end user industry performance, as well as the levers required for utilization levels across the sectors that they operate on. I think that is going to be very, very critical. So yeah, I think it's sort of a dampener, but the stocks are trying to pencil that in. How the recovery happens, I think the earnings recovery is largely penciled in on the second half. So I think the next 2 quarters are expected to be, at least in an Indian context, be very, very soft. And that is clearly being reflective even in terms of how the TCS management put forth that they're relating that this scenario, very, very similar to the global financial crisis of 2008. I think, yeah, watchful times for IT in terms of discretionary spending.
Yeah, the other point also being that much of this growth that they're penciling in for FY20 now comes in the form of inorganic growth. Therefore, if you take a look at pure organic performance, probably it's in line with TCS. And the fact that the commentary that came out from the management pretty much mirrored what the TCS management spoke about in terms of demand. The weakness seems very broad-based, and both Infosys and TCS, being the behemoths that they are definitely going to be banking on their delivery track record. They're going to be banking on the fact that they are able to swiftly pivot to remote working to get them additional clients as well. So let's see how that shapes up in terms of winning orders for them in the near term, but definitely some vendor consolidation happens. For the oil marketing companies and for the upstream companies as well, today is going to be an important day considering the flux in crude oil prices, leaving the aberration of the May contract on the WTI. The inherent weakness in crude demand is definitely going to weigh down on oil prices, physical oil prices as well, for a foreseeable future. What do you see then for some of these companies?
So, Devina, again, what has happened specifically overnight, and the adjustment thereof, and I was hearing Neeraj's piece in the morning as well. I think all the concerns related to that and oil futures, again, on the WTI part, on the June contract, pointing towards a range of $20-25 odd dollars. So, yeah, I think the kind of fall that we've probably seen, and it's largely a correlation in terms of how the overall Brent prices move at this point of time. So upstream companies which have a direct correlation in terms of how Brent moves are clearly going to feel the effect. It's not that they have not felt the effect so far. I think the kind of fall that we've probably seen is a clear reflection in terms of the earnings pressure that is expected to come through and trickle down right from the top line right till the bottom line as well. So yeah, there are obvious concerns that are obviously getting played out. The other spectrum of this thing is valuations as well for the upstream companies. Valuations achieved, dividend yield is fine at this point of time. But again, I think it's a very difficult call in terms of whether cash flows can be at sustainable levels for the better part of this year.
Mayuresh Joshi, one very quick word on Bajaj Finance, 30 seconds. UBS has come out and downgraded, a bunch of others have done that. If you had Bajaj Finance in your portfolio, would you get out of it or would you stay put?
No, I think most of the damage, Neeraj, has been done for Bajaj Finance. So what happens going forward is largely expected to be a strong earnings recovery in the second half. So if I'm still holding on to that, even after this massive fall, I'll continue holding on to that stuff.
I just want to quickly run you through some of the changes that UBS has done with regards to a rating outlook as well as a target price cut. So I already spoke about Bajaj Finance, where they've downgraded the stock to a sell. Target price is down from 4,600 to 1,600 on Bajaj Finance. They've also downgraded Ujjivan Finance. They've downgraded to a neutral. Target is 400 from 450. HDFC Limited target has been pushed down to 2,100 from 2,850. Shriram Transport Finance saw a downgrade from S&P Global Ratings as well, and now UBS also has downgraded it, and 1,000 is the target price from 1,650. Then you've got M&M Financial Services, 230 from 500, L&T FinServ from 165 to 80, and Equitas from 160 to 60, and LIC Housing Finance from 475 to 300. So NBFCs across the board, target prices have been slashed. Mayuresh, you want to comment on that and the kind of dent this entire space is witnessing?
So you need to give it time, Devina, as I've been saying time and again. What has happened in terms of the expectations of the loan growth actually deaccelerating for most of these firms, what happens in terms of the moratorium period announced, which clearly gives a lag in terms of the cash flow management and the asset liability mix as well. The third obviously is the pressure points which are very obvious put out in terms of unsecured lending, SME lending, so on and so forth, which has a say in terms of both reported numbers on the GNPA side, close stage 3, close stage 2 and 3 as well as the provisioning required for the same, which also has a train in terms of both an impact on the cash flows as well as how the capital adequacy stacks up. So capital adequacy is still very, very reasonable for the top-notch players, but what happens with all these parameters actually drag their earnings down. So I think we'll wait out for the numbers because I think the first half is going to be extremely, extremely soft on all these parameters for this space.
Yeah, I mean, for Bajaj Finance, any which ways you can expect, some bit of normalcy to come back only towards the end of this calendar year, since the lockdown anyways got extended. The other one I want to talk about is the Deepak Nitrite. Now, this one comes into focus because, as per Finance Ministry notification, the anti-dumping duty imposed on acetone imports from countries like China, Saudi, South Korea has been extended by another 6 months to about October 14th. And this is in order to protect the domestic market. And Deepak Nitrite here is a bigger player and definite positive for Deepak Nitrite on the back of this anti-dumping duty on imports of acetone. You want to come in, Mayuresh?
No, so if somebody is holding on, clearly hold on, because this is one stock where we have been extremely, extremely positive. Obviously, I think it maintains a huge leadership position when it comes to phenol and the byproduct acetone as well. So any news related to this, as you're mentioning, is obviously a huge positive. What also happens is the clear transitionary trend that we are seeing in terms of all the three segments that they operate out of, basic chemicals, performance chemicals, and specialty chemicals as well. So all those three in terms of performance has done exceedingly well. This quarter and next, also the impact might be there on earnings. But the rebound in terms of a shift from the Chinese market, de-risking from export-oriented customers as well, both from the European and the American markets, I think that does hold good for Deepak Nitrite. Yeah, so anybody holding on clearly should hold on to Deepak Nitrite.
Well, we'll watch out for these names. So do watch out. NBFCs we've discussed a lot already. Mayuresh, a quick thought on Bharti Airtel. Rajat spoke about the technicals. What about the fundamentals? Is this a corrective move which gives you a chance to buy? Because the common refrain is everybody's using data in a big fashion, so telcos will naturally benefit.
Oh yes, I think that's a given right now, right, Neeraj? So I think everybody is on to data consumption in a significant manner. They've also taken tariff hikes. So I think these elements obviously work in favor for Bharti Airtel. But the cash drain is very, very evident even now. Yes, it's comparatively better placed compared to our Vodafone Idea. I think the capital raise that they have done the AGR dues and what they're probably deposited at this point of time, even in terms of their self-assessment. I think that's all fine. But what comes forward is also the capex requirements. They've cut down capex quite significantly on a year-on-year basis. But the capex will still continue. How they probably bid in terms of the new 5G, whether they do that or not in terms of pricing. And again, I think all the refarming needs that probably come in terms of circle approvals that come for renewals, along with what happens in terms of their broadband businesses. So I think the cash flow drain is definitely there. But yes, I think from an earnings perspective and a data consumption perspective, with the tariff increases, cash flow improvement is there to be seen for Bharti Airtel as well. So yeah, this is one stock that I'll still probably hold on if I do have that in my portfolio.
Okay. Mayuresh, before we let you go, quick 30-second answer. Anything that you feel you're likely to buy, not in maybe bulk, but create an SIP in?
No, so Devin, I think we still remain extremely constructive on the pharma space. Yes, it's a consensus trade, but earnings will still hold up. The retaliatory actions will actually bode well in terms of approvals being seen for a lot of Indian pharma companies. So Alkem Labs from the mid-cap space looks very, very interesting. The Indian and the US business should hold up. The pipeline is pretty strong, and balance sheet probably looks far more sturdy at this point of time.
We leave it at that, Mayuresh. Alkem Labs is a choice that Mayuresh has within the pharma space.